Hey gang, welcome to another episode of Charts and Coffee. Happy Tuesday, everybody. Great to see everyone. All right. Hey, by the way, and I'm just in the process of getting this done, is our Charts and Coffee is being uploaded as an audio and possibly a video podcast as well. So I think you should be able to find an episode or two on iTunes already, and we're going to keep uploading the episodes over there so you can catch it for those of you that want to check it out via podcast or any one of those cool podcast apps. So excited about that. All right. Again, happy Tuesday, everyone. We're winding down this month of March. Where did it go? It flew by. It wasn't a bad month at all. I got to say, a whole lot kinder in terms of volatility than January or February were. So happy about that. We had a great session in Sector Secrets yesterday. So thank you for those of you that were there. It was a really, really, I hope, eye-opening, light bulb popping session. Amazing group we have there. So, and speaking of the amazing group, Mr. James Harris, how are you doing, my friend? One of our rising stars in the room. All right, thoughts on JEF? Sure, let's kick it off with some Q&A, shall we? This is another members pick. Okay, so, right back into the financials. Now remember, and you guys know the process, index, sector, stock, right now, and through March, what is working? Let me at least rehash this, and we really discussed this at length. We have to avoid the broader indices that are not in trends right now, which is to say of the four, and I don't really consider the Russell a broad index, but it is considered one of the four. So Russell, Dow, NASDAQ, S&P. Now, a lot of people get blinders when it comes to the S&P and the NASDAQ. For now, don't do it. Avoid the NAS until the NAS can take out the swing high. And this is not a textbook, this is really not in any way. Let me see if I can find the right drawing tool here for this. Oh, here we go. This is not a textbook, what I would like to call 1, 2, 3. It's not a textbook 1, 2, 3 at all. But that's what it would look like. Ooh, right there. That's what it would look like essentially. And until we can take out that swing high, which you can see is marked by a Darvis. Let me zoom in a little bit on what I just did. Until that can take out that swing high, again, we are absolute chop. We're not really going anywhere new. So especially in this range in here, from this high to this low, we're stuck in a range. Now, why do I mention that as James asked me about JEF? We've got to look, and there are plenty of them. What is the angle? Gang, if you've been watching me here at Charts and Coffee, definitely these dots should be connecting. Reflation. Okay, Rog's told me focus on the markets that are going to benefit from rising inflation. Grocery store commodities. The indices aren't really that great right now, but there are other markets. Energies was a market I discussed in the free video yesterday. So if you're on the Simpler Trading YouTube channel, check out that free video I did where I walked through the energies plays, and it's a broad play. Yes, it starts with crude and RBOB, but then it just branches off into oil stocks, oil ETFs, and even the commodity ETFs. So there's a lot that's setting up there. And so when we look at JEF, that takes us to one of the overall sectors that, whether you're looking at the KRE or XLF, that's working right now. So yeah, you jumped in last week when it was double green. Okay. And so, take a look at the earnings. See that right there, my friend? Right here. So I know one of these episodes, we've got to jump into a little bit of an earnings discussion. So, and this particular symbol brings it up. And when you look at earnings like that, well, let me show you, for example, Ford. All right. I know we've been in Ford. We want to get it back into Ford, but we've got this over here, right? Now, many of you already know the way that I like to look at earnings, and it's pretty simple. It's a 6-4-2 approach, meaning 6 weeks out, I want to start scanning what is double green right now. 4 weeks out, between 6 and 4, I like to start thinking about what I can buy on the dip. 2 weeks out, I'll typically just start to remember that implied volatility is going to increase the premium. I don't want to hold through earnings just 2. So what I'll do is, okay, if April 27, let's just do a rough 4 weeks. That's pretty simple. So we'll go back 4 weeks. Actually, we don't have to even do a rough. Let's see. 27, right? April 27. This is all you have to do. Here's the 27th, right? Draw 1, 2, 3. So 30th. Put a vertical line on March 30, right there. That's your 4-week out level. So what I'm able to do, and I'll just paint it green means go. Now, what am I looking for? Inside that window, I'd love to play dips. Now, we also can extend that out another 2 weeks. So I can put another vertical line here. So all we've done, really simply, is just said, hey, when am I looking for that trending market to continue to trend with the psychology of earnings? So taking that back to JEF, again, remember 642, super easy. So remember here, where was the prime play, James? Post earnings, we got to give the market a little time to settle down, and we haven't seen that yet. So I think earnings really was the disruptor here, if that makes sense. So I love the question. And yes, if you want to learn more things like this, okay, Rog, what is this 642 earnings window? Insanely simple. We're going to talk about how I use things like a free service called Estimize to look at the historical nature of what earnings have typically done, how to use whisper numbers correctly. In other words, using the old, it was an old process where analysts used to literally call up the accounting desks of these publicly traded companies, go, how do your earnings look? They call it force rank. I'm kind of mixing a couple stories there, but it's the old force rank, which was actually outlawed, but they brought it back in a way that's more crowdsourced. And those numbers are way more accurate than the typical whisper numbers. It takes into consideration company guidance and many other things. It's a fantastic site for those of you that like to trade earnings. And we're going to definitely have to talk about that, because case in point on that JEF, James, that was and is a market affected by the post-earnings phenomena. So what do I want to kind of remind everybody? 642, when were the clean setups? Preceding earnings, right? So good stuff, James, and thank you so much. All right, SCHW. Hey there, Vish. SCHW, Schwab, was probably one of my favorite names through last week and through last year, and I still like it. So, we've got to be aware of earnings as we go into this quarter. Again, right? I mean, that's just the way that it is. Financials usually kick them off. And where are we in terms of that pullback on Schwab? Yeah, I actually like this one. A nice volume ledge that this market's able to hang on to. If it doesn't hang on here, you can see we can take quite a tumble down to about 58.70, $59. So this is going to be a pretty important level to keep an eye on. I'd be very tempted to drop a few VWAPs here on this chart to see, especially where a swing low like the 29th might have a volume weighted average price support level. But nice support at the wave right now with a great volume ledge. And then FANG, not to be confused with FANG stocks. This is an energy stock, Diamondback Energy. I like energies, but I've got it. So Vish, this is where, and this is where I know this is going to look crazy busy, but this is a multi-chart. This is something that I created for myself many moons ago that allows me to scan multiple heavy weighted stocks within a niche or within an ETF sector. So, for example, I would go pull up XLE, OIH, XLP, and I'm just going to pull up XLE here, okay? What this is going to do is pull up all the stocks in this ETF, the top 11 weighted names. This does need to be updated from time to time, but it's very, very simple. Now, if I'm looking for relative outperforming stocks here, I'm not necessarily looking at the XLE, am I? Right? This is the selective process that I created using these pre-curated lists. What's pre-curated? I think those of you that have been using IBD for a really long time know, wait a minute, that's a great list of 50 stocks, and I know there's going to be attention on. ETFs have created a similar phenomenon where they're going to move with this ETF, especially liquid, actively traded ones, and then I'm looking for the relative outperformers within them. We've got, in this case, 4 of them. Double green. So all I need to do is pull up this multi-chart. How simple is that? I get a little snapshot. I can see the number of dots. I can see the dominant grab candles, little chart analysis, little price analysis. But most importantly, I've got the JT trend flag labels. And what's even cooler is these are all free tools that I'm using right now. These are my tops indicators, grab candles, Darvis, propulsion, wave, grab, and then the JT trend flags. So it makes it really easy to set up. All right, so in terms of FANG, what I would have to say is we probably need to do a little bit of research like that because I see this as yellow, right, Vish? So I'd love to find a double green, of which there are many. Hey there, Shane. Any thoughts on shorts? No, I know that a lot of folks think the dollar is really reversing, and you know, it's hard to look at the euro and say that the dollar's strength isn't there, but I don't want to buy the dollar. If I do buy the dollar, it'll probably be against the yen. Yeah, 6J. Here's why. So you might say, okay, do I want to buy the dollar against the euro? Well, it is double. Well, so let me take that back. So do I want to buy or short Aussie buy dollar? Because remember, 6A is Australian dollar versus US dollar. So I don't want to do the Australian dollar, New Zealand dollar, or the Canadian dollar, okay? 6C I like. I'm with you there. If there is a spot where the dollar strength is going to be managed, and if the dollar does re-weaken, we'll see a really nice kind of slingshot catapulting type move, a continuation of this dip back to the upside, it's going to be in the Canadian dollar. However, if you're wondering about taking shorts in another currency and buying the dollar, 6E, bounces in the 6E could be certainly a consideration, but the one that I like the best would be the 6J, because as long as the overall markets are continuing to look like they want to trend higher, yen will be weak. So let's not have to absolutely lean on the US dollar staying strong. Let's think about what currency might stay weak. 6J would be my thought on if I'm going to short another currency and buy dollars. So I hope that helps. All right, moving on. Hey there, Mike. Good to see you. Let's have a great day. I'm with you. Yes, ARK is launching that new ETF for space. Let me know if you want to see all 39 tickers. Oh, gosh. And the main one is ARKKX. Yeah, at some point, I think we're going to look. One of the things that I definitely want to do more of in the mastery is dive into some of these transparent, actively traded ETFs, because it gives us almost a ready-made watch list. However, because ARK is in some of the smaller stocks, sometimes an inordinately weighted owner of the stocks, of the shares, their buying and selling can create massive swings. And that's what I think is hurting a lot of folks. So if you're going to sort of play ARK as a watch list building tool, you got to stick with the liquidity where ARK can't quite yank the stock around as much. But yeah, I'm pretty interested in seeing what Kathy's up to. I certainly would not bet against her. So thanks for that, Mike. All right, take on. Hey there, Nikolai. How are you doing, my friend? Gold and silver is on sale. Gold, I want nothing to do with, my friend. And I think if you guys have been tuning in to Charts and Coffee, you know, thanks but no thanks to gold. Thanks but no thanks to gold. It's really a double red. And if anything, gang, it's a short. Look, the opposite of, so if we have this coin, I have my little daily stoic coins. We have this little coin, right, called buy the dip. On the other side is sell the rip. right? So people have been buying the dip, buying the dip, buying the dip. When we go double red, boom, sell the dip, other side of the coin. So double red means when the market rallies, that's the rip. Rip usually usually suggests it's a very quick ascent. But yeah, we want to short into these bounces essentially. So as long as real yields continue to move higher, what's a real yield? There are charts of this, there are graphs of the prices, so you can track real yield without knowing this. But just so you know what a real yield is, this is going to make you very rare amongst the financial universe of people who still consider gold a flight to safety. It's an inverse relationship to real yields. The nominal yield of a bond minus inflation. We know inflation's moving higher. We know that the bond yield's been moving higher, but bond yields have been moving higher more quickly, and therefore that real yield continues to increase. That is going to keep the pressure on gold. But your other symbol there, silver. I don't like silver on the daily, but this is more of a portfolio conversation. For me, this is more like a capital and coffee conversation, but I like silver, and this is the ruble. I don't know why it always does this. There we go. Silver futures. There we go. Silver, I like on a weekly. I actually like silver on the weekly. It's sitting on the 200 exponential right now on the daily, which is nice. It's a technically relevant level. There's a nice volume ledge here accompanying that. That doesn't surprise me one bit. However, this is a longer term play for me. I've straight up bought SLV, and I have been on dips since about the emergence through 1780, 18. So I'm really buying dips. And this is a really easy to recognize when a basing longer term base is finally starting to emerge from it. We take out volume ledges, we take out key exponential moving averages, cross, and then the double green starts to emerge. So this is a longer term play. So I've added this to my portfolio. It's a long SLV play. All right, so hope that helps. Hey there, Kim. How are you? Good morning. Yesterday's session was awesome. Thank you for adding the training room. Yes, thank you for the reminder on that. Yeah, we added the training room to the mastery. Yeah, I'm really stoked about that because what we now have is what I'm really excited about. I'm just playing around with these banners, trying to find one that's not so big. Oh, that's kind of good. That might work. Kim, yeah, so one of the things that we did is we added the training room. So for those of you that are really new to futures, that are really new to options, or even the tech, my gosh, we have some of the best tech folks. Daryl's in there, Duncan's in there. I think David does some tech. So we've got a tech session where people are saying, gosh, how do I fix my charts? Or how do I get this installed? We have simpler technology sessions, which is great. Yeah, really excited about that brand new addition. So thank you for the reminder, Kim, and I'm glad you love the session. My pleasure. Yeah, Mud, thank you. Yes, absolutely. Leave the NAS crack alone. I'm with you. Absolutely. Yeah, Deborah brings up a great point. And James, I don't know if you looked at that in terms of volume. I don't have a position on it, Jeff, but I love that you guys have been chatting about, focusing on the financials. What I would, again, say, look for the liquidity, look for the double green. And I'm open to those regional KRE lists as well as the XLF. Remember, KRE is not a high concentration weighted ETF. So the heavily weighted stocks, that list of the top, say 15, is gonna rotate in and out quite a bit. So be a little careful there, but keep an eye on that volume. Yes, for sure. Why isn't silver benefiting from the inflation trade? Mud, relative to gold, it is. It's just not going to benefit as much as, say, copper. All right. It's not going to benefit as much as, say, copper. It's not going to benefit as much as platinum, right? It's not going to benefit as much as, here we go, palladium. All right, let me pull palladium up here just to give you guys a direction. It's not going to benefit as much as those. So, and this is just, I'm just trying to show you directionally these charts. So, yeah, silver is still going to be tethered to gold a little bit, but it's going to benefit from a lot of the trajectory you see in copper. Yeah. All right. So let me grab another question and then I'm off to the futures room, do a little morning of day trading. Some cool things we did that I think a lot of folks may not realize futures analysis offers you. Yesterday, I did not like the volatility in the market. I did not like the way in which our exhaustion levels via volume and volatility weren't able to show the right underlying market trend. In other words, we were testing these exhaustive levels, but in a double red. That's a warning flag. So what we did is we said, look, we think there's going to be a bounce off these levels, and there was. But rather than going in with the E-mini futures, we suggested micros. Rather than going with the micros, we also suggested, hey, there's an opportunity to buy the underlying ETF options. So that's one thing I think a lot of traders think, that if you're trading futures, you're not looking at stocks, so you're not looking at options. There are liquid options on futures. And gang, we're coming up to that time of year. One of the things to remember, and it's one of the reasons I started off with futures early in my career. I've been trading futures for, over 30 years. And one of the things that I liked early on is futures have preferential tax treatment. I'm not going to get into tax advice, not my place. But if you guys are thinking about places, different markets, short-term gains, long-term gains, and what asset classes might give us better preferential, even entities. There's a lot of things that I think a lot of traders, those of you that are turning the corner, becoming profitable, you really want to think about the way you're structuring your life. And probably the first thing to consider is, what asset class am I trading? All right, gang, with that, let's wrap up this episode of Charts and Coffee. As always, thank you for joining us. Love our Charts and Coffee crew. Be good to each other. Same time, same station tomorrow. Be good to each other.